Hello everyone, welcome to my channel. I'm Financial Bro. Today we're going to have a chat starting with cryptocurrencies. After discussing the mainstream cryptocurrencies, we'll talk about indices and some individual stocks. First of all, after last week's entire correction, whether it's cryptocurrencies or indices, they've actually reached a very critical point. Now, what's important about this point is the 250-day moving average, this line. Generally speaking, this entire moving average, kids, whether in a bull market or a bear market, this whole moving average won't be broken through in one go. Even if it breaks through once, it will still need to test it 2 or 3 times before it can be fully established. Now, we've reached this stage for the first time, but everyone should not forget one thing. It has already tested the 250-day moving average here before. Whether this test is a real test or possibly a breakthrough, I hope everyone considers this carefully. Personally, whether looking at the company's performance reports or the future valuation trends of US stocks, I believe that maintaining the 250-day moving average will be quite difficult. Because, as we discuss cryptocurrencies here, what kind of situation will we face afterward? Well, let's open the NDX 100 index. The entire market trend of this round, and this entire round of upward movement is from here to here, or even earlier, starting from the surge at the end of 23-23, these two waves were quite strong, and the entire rally was driven by the core AI sector. What is it? It means whether it's NVIDIA or Microsoft or TSMC, these AI-related supply chain companies drove it up, but now the index is pulling back. So, and the most significant and dangerous point for these supply chain companies is what? Its growth rate cannot meet the previous expectations. Generally speaking, not meeting previous expectations wouldn't lead to such a decline. But we need to understand one thing. There is also a situation of valuation correction here. What is valuation correction? It means that the previous increase in these stock targets within the entire index was evaluated under a high valuation. But now, the growth we are facing is the growth of the entire market. The high growth rate of these companies no longer exists. Why? For example, if you earn from 50 to 100, it reflects a 100% growth rate. But from 100 to 150, it's the same amount of money increase. You only have a 50% growth rate, which corresponds to the market initially giving you a doubled valuation. But later, cutting it in half, you can still maintain a positive cash flow, but your total growth no longer meets that standard. The market will reprice these targets. While repricing here, what other situation will we face? Let me discuss this with everyone. US stocks, generally speaking, their overall bull market wave is around 2 years, whether it was the 2020 pandemic, 2 years and then it ended. This wave from the end of 2022 to the end of 2024, and now it's already 2025. In fact, we also have to switch to a whole new holiday cycle. Now think about it. What is the real way to significantly ease monetary policy or truly lower interest rates? It's definitely through a recession. Why a recession? Because only a recession allows for it. It's more likely for the country to release lower interest costs. There's one more point about the index. Some people say, since you're bearish, why don't you advise everyone to short? One thing everyone must understand is that regardless of how the index rises or falls, this is the 250-day moving average. You need to know that in a bear market, there will be situations of such sharp decline. But it is also possible that in this area, it suddenly becomes foggy and then it skyrockets. Similar to the so-called dead cat bounce. It might jump here, touch the MA 120 and then fall back down. This is a possibility. However, if you short here, for example, there's definitely no problem. But if you short here, say at the end of February, then your skills are very strong. In this area, in fact, to objectively understand the entire situation, this is the place where you should take profits. Why? Because first of all, this is the position of a long-term moving average, and there is capital at play here. Secondly, if it is a confirmed bear market, this area will generally see a strong rebound. Why? Because, regardless of the actions of large funds, Even if you know it will fall in the future, you wouldn't just slam it down further. You would definitely say, bro, I need to push it up a bit. Check if there are any followers who will join in, and after pulling it up, then drop it again. Here, everyone should have an expectation. Whether it's indicators or technical aspects, there is a high probability that there will be a relatively strong rebound here. However, how it will proceed afterward is my personal view. Looking at the US stock market, the possibility of it going down is greater than going up. In the short term, we are definitely looking at a rebound. For instance, Tesla has also dropped to the 250-day moving average, indicating a need for a rebound. Moreover, Tesla has not only dropped to the 250-day moving average, but also to the 250-week moving average. This is the previously drawn descending channel, and here it has also dropped to the 250-week moving average. Actually, the support in this area is quite strong. Well, although it's strong. I remember often expressing a viewpoint about Tesla last year. When it's below $1 trillion market cap, you buy and overall observe it. When it rises to $1 trillion, you then assess the situation. Should you sell? Because how do you describe this company? The boss transitioning from a businessman to participating in political aspects. It's a good company. But while it's a good company, its valuation is also very high, and its story can be beautifully crafted. But you need to understand one thing. A story is just a story. Ultimately, Wall Street's pricing of a company still depends on its financial reports. You should know that Tesla's sales overseas, are definitely quite okay, but its sales domestically are constantly being taken over by the market, as everyone knows that some car companies in the mainland play quite aggressively. They cut corners where they can, make the flashy parts very flashy, and their advertising and marketing are better than Tesla's. There's nothing you can do about it. The market has been taken over, and that's the reality. Tesla's market has been taken over, and the only business that is currently making significant profits is the core automotive sector. As for the robotics segment, even though they claim to have a prototype, it will probably take another 3 years before it can be truly commercialized and scaled up. If you take a more pessimistic view, you can add a bit more during the second round of investment, because if you look at it, there might be a potential return of about 20%. If it reaches the first round of investment, I think it's a very good opportunity. However, if you are considering investing a large position right now, I wouldn't recommend it. Firstly, the market doesn't seem panicked enough. And secondly, even if there's a small rebound after the drop from a high position, these shares still need to be digested. The shares that are stuck at a high position, no matter how optimistically you view this stock, they will still be there. It might consolidate a bit and move sideways. Based on my own views and experience with the market, I definitely have a bearish outlook on the current market trend. I'm just that pessimistic. Because this viewpoint doesn't really need much explanation. It's like how it has already dropped to about the level it was 6 months ago. If it continues to drop from this point, then it would be following a recessionary stock market trend. Why? In reality, there might not necessarily be a recession, but the market will reflect it in advance. I hope everyone can understand this point, because the current market trend has already indicated that the economic fundamentals have dropped to the level of June or July last year, which means that the past 2 quarters. Our economy hasn't changed. So why hasn't it changed? Well, at least the market has priced the index this way. I hope everyone is aware of this. And there's something else I want to share with you. I've been working on quant trading recently. Speaking of which, the target for quant trading is actually one with very high trading volume. My quant trading mainly focuses on QQ. And overall, I won't discuss the daily excess returns, regardless of the current market conditions. Whether it's a rising market, or a sideways market, or even a unilateral downward market, the daily overall return rate can reach approximately 0.3% to around 1.8%. When we say 0.3 to 1.8, what does that mean? It means that with 1,000 yen, you can earn about 3 to 5 yen in a day, and when it's more, you can earn around 18 yen with 1,000 yen. This is roughly the range. Remember, F1 is definitely for 1 year, which is about 200 trading days. This means that a relatively conservative annualized return can at least reach 4% to 50%. If anyone is interested in this, you can send me a private message. We can discuss it in detail, nothing else. As for Tesla, I'm not sure what other stocks everyone wants to hear about, because I personally believe These are just my own views and opinions on the market. The market we are currently facing is still in the early stages of a bear market. This area might consolidate again, and we are still in the initial mindset. You need to continue observing for another one or two if the next bearish candlestick continues to appear. Then it is basically established. Thank you all for watching. I didn't send out notifications and I don't have a fan group, so I'm not sure about everyone's views. Feel free to leave comments below. Thank you all for watching.